Today's video will again deal with the ABC bookstore, and we will do again another sales, return, and allowances. This one just a bit different from yesterday. So let's take a look at what we did yesterday. Let's go to the sales journal, and there was one entry, and you see that on April 1, St. Michael's High School charged something. Sales invoice 17 was the source document, and we made a sale for $250, and we had to add sales tax, so we credit sales tax payable as well as crediting sales, and then the total of the two is what St. Michael's owes to us. And we credited two places, we posted two places here with this amount of money. We went to St. Michael's High School account in the accounts receivable ledger, and you see that that was posted, and now that shows that they owe to us $264.38. That involves the sale of $250 plus the sales tax they owe to us. And then we're posting at the end of the day. If this is the only entry, we post totals. This goes to the accounts receivable account on the debit side. We credit the sales account by $250, and we credit the sales tax payable account in the general ledger also by the $14.38, and the account numbers need to be put underneath. So that was one of the entries we had yesterday. We did nothing in the purchases journal yet. Accounts receivable, we had one transaction. This was a cash sale of $42, and we had to add sales tax to it, and we collected from a customer $44.42. Nothing individually was posted, but if this was the only transaction of the day, those totals need to be posted to the accounts indicated at the bottom. So we would go to sales again. So we have another entry to sales, a credit of $42. We have another credit to sales tax payable of $242, and we have a cash debit. We've increased cash by $44.42. So in the general ledger, we had sales. First of all, let's take a look at sales credited twice for the day, and then we had sales tax payable credited twice. Actually, we had an entry back in March that's still on the books that we have not paid yet. We collected this from customers back in March, $10.95, and these are the two that we collected today, that we charged today. So those were credited. Then we went to the cash payments journal, and this was the entry that kind of negated the sale because we gave money back on April the 2nd to the customer. So the customer from April 1st returned the merchandise, and we were happy to take the return and give the cash back because we want to keep the customer happy. So this is what the bookkeeper, the accountant, had to do. We had to debit sales, returns, and allowances, and we didn't debit sales, but we used this account, sales, returns, and allowances, by the amount of the sale. And again, the sale back in the cash receipts on April the 1st was $42. So in the cash payments, we have to debit, to negate that, we have to debit $42. We credited sales tax payable back in the general ledger. We credited $2.42, and now we debit to cancel out that amount of money because it was returned to the customer, and because we wrote a check to the customer for $44.42. We then, at the end of the day, have to credit the cash account by that amount of money. So that's the transaction if a customer returns a cash sale. We debit sales, returns, and allowances, debit sales tax payable, and then credit cash by the amount returned to the customer. So today we're going to look at the same kind of entry, only this time it will be based on a charge sale. Let's go back to the sales journal, And we will assume now that it is April the 4th, and St. Michael's High School returned the merchandise that they bought on April the 1st. Now, a couple things are important here. First of all, that on April 1st was not a cash sale. They charged it, so we debited their account, as we just saw a few minutes ago, and we debited accounts receivable because we expected that customer to eventually pay us $264.38. We credited sales. We thought we made a sale, and we credited sales tax payable because we will collect that money from the customer and then pay it to the state. But what happened a couple of days later, on April 4th, St. Michael's returned the merchandise to us. Now, we don't pay them cash back. They haven't paid us yet. So this is only a couple of days later. They haven't paid us anything, so we're not going to give them money back. But we need to credit their account. So we use the same kind of entry we did yesterday, only we don't use this cash payments journal for the entry. Rather, we use, in this case, cash receipts. And we use this journal because we need, again, a general debit column, as we'll see in a moment. But we also need this column, accounts receivable credit. So let's see how this entry looks. The date is April 4th, 2019. And again, we use sales, returns, and allowances. And we use sales tax payable. So those are the same. And the source document will be different now because this is not a cash return. So we don't write a check. So we use something called a credit memorandum, abbreviated CM, and then the date, April 4th. Credit memorandum is used when there's an entry that's a little bit unusual and we need some kind of recording of what happened that we can keep a copy of and give another copy to the customer. So this is called a credit memorandum. And we will debit the amount of the sale. So if we go back to the sales journal, the sale was $250. So here we need $250 in the general debit column, debiting sales, returns, and allowances. And back in the sales journal, we credited sales tax payable for $14.38. So now we need to cancel that out. So in our cash receipts journal, we will debit $14.38. So that much is the same as yesterday's entry. This will need 3 lines though. The third line is the different line. This is the one where we have to deal with the customer's account. St. Michael's High School. We need to credit their account, and we also need to credit the accounts receivable account. So we use this column, accounts receivable credit. And on the line with St. Michael's High School, on that line, we will put the $264.38, the total amount that they owe to us, so that when we do the posting, we will credit accounts receivable and we will also credit St. Michael's High School. And we need perhaps an explanation of this. And that's not required, but sometimes it helps to explain what this is all about. So this is the entry. And let's do the posting quickly here. Sales, returns, and allowances, debited $250. So we go to the general ledger, find sales, returns, and allowances. Now we have another one. We had one yesterday. And this is from Cash Receipts Journal, page 5, I believe. And the $250. So this will show up on the income statement. I think I said balance sheet yesterday, but the sales, returns, and allowances would be shown on the income statement along with sales. So the owners can see how much money in sales was taken in. In this case, if you look at sales, is just a small amount of 2 entries here, 292, but they can also see what was returned. And not a good sign if everything is returned to us. But that's what is showing up on the income statement. And the account number goes back into the journal, 4130, and sales tax payable. Again, this is on the 4th. Cash receipts, page 5, and the debit of 1438. So we had 2 sales returns. Yesterday was a cash return, so we had to negate the sales tax payable. And today you see the 1438 credit has been canceled out with a debit of 1438. So right now, the sales tax payable, we owe what we owed since March 15th. We owe $10.95. Both were returned to us. And again, as always, the account number goes back into the journal. And now we need to post to St. Michael's High School. And if we do that, we go to the accounts receivable ledger. And that will be credited. So on April 1st, they charged $264.38 and they owed it to us. Now they returned it, and this shows that it has been credited, so the balance is 0. And we might here put a short description if we want to explain why. They didn't pay us that money, they returned merchandise. So that could be put into the description column. $1130.4 goes into the posting reference column. And finally, if this is the only transaction for the day, the $264.38 has to be posted to the accounts receivable account on the credit side. So we'll do that quickly. Journal page and credit. And now we will collect less money. So we have canceled that out because it has been returned. So back into the cash receipts journal, the 1130. Oh. So that's how it's handled. When a customer returns something for cash, it's handled as we indicated yesterday with that transaction, and we cash credit, or credit cash, excuse me, we gave money back to the customer. This time, it's a little bit different. We have to credit the account, the customer's account, and also the accounts receivable account. As always, go back and replay this again if you need to. There will be questions for you to answer after the video, so let's do that at this time.